Welcome to China Paradigm Podcast, where we share insights and stories from successful entrepreneurs and business people in China and learn what it takes to succeed in a wide range of industries. We interview Philip Beck, chairman and co-founder of Moojing Market Intelligence. Philip Beck is an Australian-born entrepreneur who's been living and working in China since 2005. Stay tuned to learn from a highly experienced angel investor with 11 years' worth of experience in investing in Chinese startups. Why is life in China 7 times faster than in Australia? What is Philip Beck's screening method for good investments? How many companies has Philip Beck invested in since 2009? How does Philip Beck protect himself from bad investments? What is Philip Beck's current rate of return on his investments? Moojing Market Intelligence. How do they extract data from the marketplaces? How does Philip Beck manage his time? And much more.
Hello everyone, I'm Matthew David, the founder of Directory Consulting and his podcast, China Paradigm. Joining me today is Philip Beck. You have been in China for 15 years now. You came in 2005 and you have been an entrepreneur since 2009. So you came with a large company first, which is actually a very good way to understand China. And after that, you decided to do things on your own, and you are now involved in 2020, and we will talk about what you did in between, but you are involved a lot in angel investing now. And that's something I really would like to understand more how you do that. And you are also involved in 2 main companies, one being a proxy, 3 companies, sorry. One being a proxy for your angel investing, which is called Do Better, and 2 others which are actually startups where you have been more involved, which are Moojing and Dianue. Before that, you have accumulated 32 years of experience, starting from the very, very low level of a company in Australia and going to the CEO level. And that's something I will have questions about. How did you do that? Then you worked in many advertisement media agencies, what we call the 4As, listed companies in the US, in London, like WPP, for instance, that everyone knows, and then recruitment companies. And finally now, you are still sitting as non-executive directors of a few companies. And that's also something I like to know, to understand more during the interview. So my first question is, what make you stay in China when so many Chinese go to Australia? Oh, I didn't mention you're Australian born. So many Chinese go to Australia and do the other way. Why make you stay in China?
I love China because it's such a crazy place. When my father first brought me here at the age of 8, and this was a long, long time ago, and it was in Guangzhou, watching local Chinese ride bicycles and have dead chickens hanging off the handlebars as they're riding home. But it's always just been a country that's fascinated me. And the thing I love the most is that the pace of business here is like 7 times what it is in Australia. So Australia is a beautiful country, a very quiet country, a very slow country compared to China. So it's just really the pace of business. Like I said, the number of decisions that I would make in the space of 1 year in China would be equal to 7 years in Australia. So that's what keeps me here. That's what keeps me alive. And it also what reinforces to me every day is that, I know less than 1% of what there is to know about China, and it keeps me on a vertical learning curve.
How did you come up with 7? Because with a note that Sophia prepared for me, I read this. So 7 equals 1 in Australia, 7 in China, or the reverse actually. Basically, it's 7 times faster in China. Why 7?
I compare it to some of the things that I back home. So because I live in Beijing, I just look at the subway system here, where over the space of the last 10 years, they've built 608 kilometres of subway line, and they're opening more subway lines. In Australia, it's actually taken 25 years to build 38 kilometres of subway line. So we're just, most of what we do in Australia is just so slow.
I see.
Whereas here, they just go, they're working at it 24/7 because, they've got to get infrastructure still now in place for the people. And they don't stop and start. I think most Australians work about 8 hours a day, and that's it.
I knew about the McDo index, where you compare the price of a McDonald's menu over the countries in the world. Now we have the Subway index, where you compare how fast it's built, right? It's a good index. Yeah. I like it. I think we should do it more often to see how fast China is developing. Let's go to one of the key aspects of the interview, I feel. We will go back on Moojing later on, which is one of the two startups you are involved hands-on, as far as I understand, and you are going to tell us more, confirm that later on. But it's about investing. And I feel that has taken a lot of your time. And I feel there was one aspect to emphasize in what you have achieved since 2009, what you are doing now, is about investing. It's about picking up a project you like, coaching teams. And I'd like to understand how do you think about investing? How do you do it? How do you screen from the beginning of where you meet with a team? I feel it's a lot about meeting a team, a good team, a team you like, a team you believe in, to the time where you decide to invest, both in your time and in money.
Yep. I have 3 criteria, and I really like what you said about team, because that's my first criteria, and it's 65% of my weight in my decision making. I have a couple of really simple rules. I don't invest in any company that has 1 co-founder, and I don't invest in any company that has more than 3, because starting a business is, like a marriage, and I think that, I don't know of any company in the world where there is just 1 leader. Every successful business I've ever looked at, there's at least 2 people where they complement one another. They make up for one another's strengths and weaknesses. So that's my sort of first rule, the number of founders. Because I'm here in China, I typically invest in local Chinese companies. So if there is a foreigner involved, then, at least 1 local Chinese co-founder, hopefully 2, and 1 foreigner. And so that's the first one. The question I ask at the very beginning when I meet the team, or the founders to start with, is, have you had a fight? And if they hesitate to answer that question, I don't invest. Whereas, pardon my language here, but when I first asked a couple of startups this question, one of them said, shit, yeah. So that, immediate reaction of, yes, we've had fights. Then my next question is, so how do you resolve your disagreements? Because as you're going through building a business, you're going to face a lot of challenges, just like in a relationship. So I want to understand, how do people resolve their differences? And if I can intuitively feel that, yep, these 2 people or these 3 people know how to challenge one another, know how to resolve their differences and move on. So the team for me is really important. And then I look at, what ability do they have to actually deliver on what they're doing. The other reason why I ask about, have you had a disagreement, is that more than 90% of the time when someone presents me with an idea, I know that's not what they're going to end up taking to market. They're going to revise their idea a number of times. They might even have to pivot and do something completely different. So again, that's why the team aspect's really, really important. So that's like 65%. Second criteria is actually what's their idea and what pain point are they solving. So that's sort of pretty classic. And that's like about 25%. And then the rest is, what other resources have they got around them to actually make it happen? And is there a market fit for what they want to do? And that's, looking at, how unique is this how easy is it going to be to copy it? But yeah, 3 criteria, team being most important. Number 2, the actual idea and do they have the ability to implement it? And then 3, the market fit.
I see. The main reason why startups fail is because of co-founders, because they disagree. So why are you so against having one founder? Is it because it doesn't have any contrarian view? It doesn't have any constraint within the team, or it's empirical proof that from experience you see that's how it works.
Yeah, empirical proof. Like I said, I don't know of any successful company in the world that's had one leader. You know, even if I look at some of the Chinese examples, you know, Baidu, even though it's not doing as well as what it has in the past, but everyone knows Robin Lee as the founder because he's always the public face. But there's very little said about Eric Xu, who's the co-founder. And the strength of Baidu came from Eric and Robin working together. You know, Robin on his own can't do it. Eric on his own can't do it. Jack Ma from Alibaba, you know, everyone knows Jack, but, you know, there's also Joseph Tsai. So those two together, you know, rub off on one another in what should be done. So empirical evidence has shown me that, you might know of a successful business, but I don't know of any successful business where it's just been one person. Yeah, there's always a hero that people see, but there's also another person that a lot of people don't see that's in the background. And, you know, one of my favorite companies that I was involved with called Curiosity China, which has since been acquired by Farfetch. But, you know, a lot of people know Alexei. He's a French national. He's been the very public face of Curiosity. But, you know, the hero behind the business is actually the co-founder, Judy Liu. And, you know, that team of a local Chinese person and a French national, again, is another sort of empirical evidence of how two people can build a very successful business. And two very different people.
I'd like to go back, and because China is a very interesting case, and I know them personally. So I like to understand when you met with them and what you saw at the beginning, which made you get an interest into the business. But first of all, I like to share the pace in which you invest. Initially, I understood that you were investing in one company every 6 months. But then I read again my notes. And is it every 6 months you invest in 12 companies, or is it you invest in one every 6 months?
It's about one every 6 months. So
okay, I was right.
Yeah,
okay, I was right. Okay, so you do an investment every 6 months. So since when and how many it is now?
So since January 2009. So it's 11 years now.
Should be 20.
More than 25 companies. Yeah, it's about 25 companies. Around 18 of those have failed. So not every startup is successful for a whole lot of reasons. So like every other angel investor, I've had my failures, and I'm still looking for my Alibaba that will make up for all the losses that I've had.
How do you do to invest? Because I believe if you invest every 6 months, it couldn't be a large amount of money. It could be you might not have to be able to hire very expensive lawyers every 6 months. So how do you do it? Do you join a pool of investors? Do you do on trust, and then you would do stage investment and invest more later on? What's your formula to a bit protect you? Because the world of investing for people who have never been entrepreneurs or who are thinking about it seems like a bit of an angel, as we say, a free money, and we don't think about the risks that people are taking when they invest. So how do you manage that, especially when it might not be a lot of money?
I made a lot of mistakes in the first couple of years, and then I was lucky enough to go into a couple of projects where I was co-investing at an angel stage, and it was with a couple of famous funds. But there's one particular guy called Herb Chur, who at the time was with a VC company called China Rock, which is part of Farallon Capital, which is one of the largest hedge fund companies in the world. Herb had done more than, this is 10 years ago, more than I think 400 investments. I learned a lot from him. So from Herb, he's no longer with China Rock. He's sort of semi-retired, but he taught me a lot of lessons, which I now use because it's my own money. It's not other people's money. So I would say most of the angel investment I do, 75% of it would be with other angels, and 25% would be where I'm probably, the first angel to go in. But yeah, the first 2 to 3 years, I lost a lot. But I learned a lot through the process.
There is a theory, and I think, what's the name? Dave McClure from 500 Startups, I think, the name of the fund, was saying that I invest 50,000 USD. I mean, it's a fund, so it's not his own money. But I invest 50,000 USD to 100,000 USD, and that's enough to build the first product, to test the water, in a model of lean startup, of the 4 steps to the epiphany, as those books, Steve Blank explained that in his book. Are we talking about the same thing when you are angel investing yourself? Are you looking at financing enough so you can have a product to go to market, or something good enough to test the market? Is it what you have in mind?
Yeah. So normally I just want them to validate one thing. So if it's at the very beginning, because what investors are looking for is how have you validated what you're pitching to me now. So as an angel, it's enough money for them to validate what they want to test. And then that gives me and gives them confidence to then go to subsequent rounds. And, it could be pre-angel, angel, post-angel, eventually get to like a Series A. But every step, even when you get to Series D, it's okay, what are you going to validate now with this money to prove or continue to prove that there is a market fit for this startup that's going to make money? So the key thing is, what are we trying to validate that's going to give us the confidence that we can then go, okay, from here we can then raise, I might put in 100,000 US. From here, that's going to give us the confidence to then raise 500,000. And then in another round, maybe 5 million.
Talking about the other type of investment where you are in a pool of investors, so the 75%, if my memory is correct. So are you part of different pools of investors? Could you name some of them? Are you asking for those entrepreneurs to pitch together? I think there are some clubs where entrepreneurs are pitching to a group of a jury. How does it work? And how do you collaborate with them? Are you different? First of all, are you members of different pools, and how do you collaborate?
There are pools. So there's like Angel Vest, Shanghai Vest. There's pools here in China, pools overseas. Typically, the pools I work with is because the investor community is pretty small, and most investors start to understand. Okay. Matteo, his interests are in these areas. Philip's interests are in these areas. So, sometimes I will see a startup where I really like it. I think it's fantastic, but it's not really my core competency. But I know other investors that would be interested. So, I will introduce the startup to those investors. So it's not actually a pool. It's just it's a network of investors knowing, okay, this one's in agri-tech, so I think that, these investors would really like to see what you've got. So it's through networking and introductions, not pools, that I work with.
I see.
Originally I was in pools, but now it's just like, if I see something, or other investors might see something and go, Philip, I've just looked at this startup. I really think that you'd be, interested in it. So then, it's through those referrals and that networking that most of what I do happens.
I see. And then
occasionally I might see something in, whether it's because I'm involved in a couple of incubation programs like China Accelerator in Shanghai, or Heidi and Pioneer Park here in Beijing, or Comb Plus, and one that I'm sort of volunteering for at the moment called Urban X, which is helping African entrepreneurs with startup initiatives that they have in Africa. So, occasionally I might see something in that those incubation programs and then want to invest.
So I like to ask a personal question about why choosing angel investment instead of doing like what all the Chinese do in Australia, investing in real estate and going into real estate in Australia. You know everything about Australia, and you could do a much safer investment, leverage by loan, and so on. So what has been the decision for you to invest as an angel? Is it for the passion because you're interested in it, because it's more exciting? Is it because also you believe on the long term actually it also can pay off better than real estate?
If you want to, real estate is a great investment. It's proven itself over time, at least I think an average of 11% each year. In like my homeland, higher in China if you buy a property. So it's one way. It's a more confident, very low risk way of investing. I have no desire to have 17 properties or 25 properties. I'm quite happy with the 2 properties I have at the moment. So that part of my life is set. I've had people in my life that have shown confidence in me and taken risks on me. Hopefully they've got the returns from that over the years in the corporate world. I'm much more of a risk taker because I feel I've got enough in my life. It's not going to be measured by number of properties, cars, the sort of trips I do. And I just like the risk factor. Maybe I'm a bit crazy there, but
The thing,
I think coming from...
Yeah, people don't realize, but at some point, you want to have an impact when you have reached a certain level of success in your life, in your corporate life, or in business, and that's something that people don't realize it's really happening. It's not only the superstars like who are giving away like the Bill and Melinda Gates. It's also a lot of other business people who want to share, who want to help. That's what I love with entrepreneurs. At some point, they want to have an impact and share. It's not about the money anymore. It's about doing things.
It's about helping people be successful. And I think, like I said at the beginning, I've had 3 really good bosses in my life, but my first boss, Peter Irvine, who was my boss for like 14 years, taught me a lot. And, he's an example of a guy that's done really, really well. But through his entire career, his number one focus, even when he was managing director of Australia's largest advertising agency, was always on helping people realise their purpose for their life and then removing all the barriers and obstacles that we all put in our way. And, I'm not good enough, or I can't do that, or I don't have the money, or whatever excuse that we make that stops us from doing things. Peter taught me, and he taught everyone that's ever worked with him, that, what you want for your life, you can have it if you put a plan together and actually make the effort to see how you can make it happen. And, he made a lot of money from a coffee business that was a direct competitor to Starbucks, and he's subsequently sold that business. But even now, he could retire and lead an easy life, but he's still now, in his, I think, 70s, still focused on helping entrepreneurs, not make the same mistakes that he made.
Interesting, and I feel it's more widespread than what we think. Actually, this attitude toward new entrepreneurs, or toward basically the agents of change. I would say, not necessarily, but maybe business, can be NGO and so on. I'd like to ask you a question about the performance of angel investment. What if you could share a bit of numbers of we talk in fans about IRR or ROI? What's your current ROI on investment and let's say IRR? I don't know if you have calculated it.
Internal rate of return.
It's already return?
Yeah.
Okay.
Right. Okay.
Yeah.
Yeah. So so my return at the moment is around 24%.
That's good. You have learned by yourself, and 24% annual or 24% from 2009 to now.
24% annual. Yeah. So because when you go in as an angel investor, you've got to understand that most of what you do is going to fail, but the ones that work do spectacularly well, and that's the return that an angel will get, as opposed to someone coming in at a much later stage. The simplest example would be, I could buy shares in Alibaba now, and I'm going to make some money. But if you were involved from day one, or like Apple is another great example. If you were an even early shareholder in Apple, you've made 30 times more money now since they floated than what you would have done in other investments. So getting in early in the right thing. Same with real estate. You can go into a market, but other people might be going, why are you buying in that area? It's run down, it's old, it's horrible. But you can see some trends where there's going to be a lot more younger people moving in. So it's always, whether it's real estate, share market, or angel investing, it's spotting the trend, and there's no secret to that. A friend of mine once said you could have a dart board and throw darts at it on what sectors you should invest in, and you might do just as well. So if there was a magic formula, then I'd probably have a lot more money and helping a lot more people.
I feel there are different types of angels. The ones who are going to invest and then coach the team. The ones who are going to invest and introduce to a lot of partners, to a lot of market access. And the ones who are going to invest and try to find the second round, to find the A series, to find the other fund, which is going to be able to actually increase the capital, but also to buy the shares that the angel has. What's your focus after investing as an angel, and does it make sense to have this segmentation of different type of angels, to have the one who can help opening market, the one who can coach, the one who can actually introduce to next investors?
Yeah, it's actually an area I focus on quite a bit, even when I'm not involved in a business, is helping the founders understand, what do you need at the moment that's going to help accelerate your business? Is it money? Is it having advisors or people to help you accelerate your idea and how to bring it to market? And sometimes you might only need that angel or that investor involved heavily in your business for 6 months, 12 months. And then you've got to look for a different group of people, because now your business has reached a different level or different stage. So I'm, one of the things that I've learned about myself is that I step away from the company once it gets to Series A. Because my key lesson, I still will keep equity, but I'm hopeless at running any business that's going well, or shows good signs that it's going to be running well. I focus on things that are in trouble and have a lot of issues, which is why I like angel investing. But once it's going well, I step away. But when I step away, I will help that company find the most appropriate people or investors to move them forward. But yeah, your point is very good. Is it money? Is it expertise? Is it other like-minded companies whereby through collaboration, that's also going to help them grow?
So you said 18 companies among the 25 you invested in failed. Again, if my memory is correct. And that means that 7 of them made you 24% of annual ROI. But some of them, I'm pretty sure you are still within the capital. You are not sold yet the shares. So basically, does it mean that your results are made out of 2 investments, 3 investments? Could you share a little bit of the spread of the performance?
Yes. So if I was to give you some empirical evidence, for every 100 angel investments that an angel might make, maybe 10 of them will survive. Mm-hmm. So more than 50% will fail in the first 12 months and never exist again. The other 40% will fail within 3 years. So you're left with 10%, so 10 out of 100 that are still going after 5 years. One out of those 100 are going to make you probably 30 times the money that you put in and effectively pay back all the others.
And so that was your case, one of them.
That's the empirical, yeah. So that's the empirical evidence sort of around the world. They're the sort of numbers. People say they can get smarter about investing, but so far I'm about average. So I'm not performing better than the rest of the world.
But it seems you are, because you had at least one among 25.
Yeah, two actually. So yeah,
two.
I've been lucky.
And the two ones you have been successful in exiting. What kind of dimension was it? Was it one of them making all the investment that you made so far, and the other one doubling the investment you have made? What proportion was it?
So one made more than everything that I put into every other company.
Interesting.
So it covered all my failures and all my losses, and I still hold equity in it. And yeah, so that's going to continue to give me a return. And then the second one is about to exit. So, I already know what the position on that will be. So, and that's typically, what people find. I wasn't involved, but, because I keep mine private, but, I've got like one example where someone was an early investor in Yoku, and when that finally listed, they made back everything that they'd lost in all their other investments, and then a whole lot more. So, yeah.
So it can be up to the listing. So it means you even could not get your return back as Series B, Series C, but you might have to wait for the listing to get the full return and to share your entire equity.
Yeah, so there are investors who will exit as different rounds occur. So someone might have been an angel or a Series A investor, and when it gets to Series B, they might choose to exit some or all of their shareholding and get their money back. I don't do that. I stay right through the whole process until there's some sort of trigger event, because I'm not part of a fund, so I've not got to guarantee any sort of LPs a return in 5 years or 10 years. And that's also another thing as an entrepreneur you've got to be aware of is when you're getting this money from a company, because a lot of people live under this notion that you're going to be successful and list in 3 years' time. Yes, there are some companies like Pinduoduo that might do that, but the majority, it's going to be a 7-year, process before a trigger event of some sort occurs, whether that's listing or selling to somebody else. So, yeah, I don't exit at B, C, or D. I hang in there because I'll end up making much more money.
Yeah, I got a story by friends of mine in France. The investors had to get the return, and they replaced them. Actually, during the pandemic, they replaced them. There were co-CEOs, bottom CEOs of the company, and they were doing well during the pandemic. Was in e-commerce, but they replaced them because the sale didn't work out, and they wanted to sell. They had the pressure of LPs, as you say. Limited partners means people who put the money in the fund who are not liable for their own assets, but they put money in the fund, and they're asking for return. They sign for return from the fund, so they are pushed to sell quickly, and it's to find people who can invest long term. That's also a consideration to have in mind.
Yeah, and again, if you look at really successful companies, their investors are long-term investors because they've had this incredibly strong level of confidence and faith in the company. They don't want to get out because they can see there's a much better return down the track. So they're going to hang in there, and they might continue to invest because they don't want to get diluted. That's to me a good sign of a long-term investor, because they have the faith and the confidence in the business. A classic example is Yahoo, when it was in its death throes. That had been a long-term investor in Alibaba. And eventually it's really only equity that it had was its investment in Alibaba in China and Yahoo in Japan. Without those two, it was completely bankrupt, or no other real assets that were performing.
Yeah, they made it at a larger scale, but that's the same idea. I'd like to have the other side of the table, and what questions should funders ask to investors to navigate among them? You have so many now investors, funds, angels. They advertise a lot about it. You have pools of investors. What questions you think the funders should ask, which are sharp questions, which help them to decide? Should you ask for credentials from investors to give names of other companies investing in to see how they behave? Of course, they're going to give you the good ones. Should you do your own due diligence to go through the companies who claim to receive money from them? Should you go that far, or you should be so happy to get funding? I take my example. I got funding from Kima Venture, with a very, very active fund in France from Xavier Niel. And I was so happy for my first business to get money from them. I didn't check anything. And I was lucky. They are very good guys. But I felt that I was very naive, very immature at that time. What would be your advice on that?
Again, another really good question. What I encourage founders to do is not to look for investors, but to look for other companies that might be similar to them, or where they respect the founders of those companies that are maybe in an industry sector like they are, and then find out who invested in them. And if it's not a competitor and they get to know the founder, is to then ask the founder of that company to introduce them to the investor, because there's nothing more powerful than a company that an investor has put money into. It says, if you were the founder and you go to your investor in France and introduce me, that's going to be much more powerful than me reaching out to a potential investor. So I know it's probably a different way of looking at it, but encourage founders to look at, okay, who are the companies that might be in this area, not direct competitors? Who are the investors? What do you think they've done for that company or that founder? Get to know the founder, because the founder, most founders are very helpful, and they're going to tell you, like your example maybe, or they might have another example where they go, I got the money from this really large fund. Wow, but they are so bad to deal with. They want to be involved in every single decision I make, and they're just holding me back now. I really wish that I'd not given them voting rights. So you're going to get the sort of warts and all story from founders, and sometimes a founder might be painting things to be more beautiful than what they are, but intuitively you can see through that. So to answer your question, I would encourage founders to talk to other founders and who invested in their business, and then if you get to know them or they like what you're doing, get them to make the introduction. That's, I just think, much more powerful.
I like to close this part about business, angel investment, to conclude that actually, first, in terms of impact, it may be better than real estate, but in terms of returns, with 24% every year, it's also very good compared to a real estate investment too. So actually, on both sides, you can have an impact and be rewarded for the impact you have by doing angel investment.
Yeah, you just got to be prepared to, risk the money that you do put into companies and, understand, wow, I lost that. That's never going to come back. Whereas with real estate, I've still got that house, it hasn't gone, might have fallen down or someone burned it down, but insurance will cover it. Yeah, you've got no backstop. So you've just got to be prepared to accept that.
Linked to angel investing, there is China Accelerator and incubators. You are part also of a Hainan program and a program in Beijing, very linked to government. That's a specificity of China. I feel a lot of programs are linked to government, and they really local governments push for entrepreneurs, push for investments within their province or city. From China Accelerator, I'd like to focus a little bit on China Accelerator here. It's a lot of foreigners or internationally minded people who are joining China Accelerator. They are based in China. It's not easy for foreigners to succeed in China. We see big companies failing. But on the other hand, we see companies which were funded or partly funded by foreigners to do very, very well, like Tuna, funded by an American, May.com, funded by 2 French people. QSD China, as you mentioned, with Alexis and Judy. So my take, actually, when I look at it, I feel that I don't see so many successful companies created by Chinese in France. Which were listed like Tuna. So when I compare, actually, I still tend to think that foreigners can make it in China actually more easily than Chinese could make it in Europe. It seems more difficult to make it in Europe. That's my first thing. But my question is about China Accelerator. What are the industries in which foreigners have a chance to succeed in China? William Bow talked about that before, and he said, as I remember, education, food were some sectors where foreigners could succeed. What's your take on it? Tuna was in travel. May.com was in fashion. QSD China was a lot about CRM, social CRM. That could be Chinese. There is no much edge of being a foreigner and doing that. What's your take?
My take is that a foreigner can be successful in any sector. If I look at Tuna, using that example, of course there was, again, everyone knows Fritz Demopoulos because he was the public face of Tuna. There's actually 2 other co-founders, Douglas Koo, a Malay Chinese, and CC Zhang, a local Chinese. And that's a really good example of 3 co-founders that complemented one another. And also, I think Fritz and Douglas, I think, had 10 or 11 failures before Tuna. So they're an example of 2 people working together that had a lot of problems and challenges. But the 3 of them, together with CC Zhang, complemented one another and brought different skill sets to the table. CC Zhang was, from an operational perspective, fantastic. Fritz, from a investor relations, public spokesperson, fantastic. Douglas, who set up Mindshare, I think originally in China, part of WPP, well connected to the advertising community. So in terms of getting early revenues into Tuna, had the credibility with a lot of clients here in China. So it's a good example of just, that business in online travel, leveraging the capability of the founders and working together. And importantly, again, my opinion, I believe Fritz and Douglas were focused on making CC the local hero, because eventually when Baidu came in, CC was elevated to the number 1 position. And for a lot of people, they're going, who is this guy? But he'd been involved since day 1. So foreigners can be successful here if they, do a couple of things. First one is they look at how they can help a local Chinese person be successful. Alexi focused at Curiosity China on, how do I make Judy's vision, a local Chinese, a reality? I've got the connection with the foreign world, French national, talking to the international premium brands, but someone they could trust very easily. Judy, local Chinese, super smart, very focused on systems, procedures, and operations. Made it happen. So again, a good combination. So to answer your question, any sector, as long as that foreign person respects China, respects Chinese people, doesn't come with a Western mindset, and remembers they've got 2 ears and 1 mouth. So, they do twice as much listening and observing versus talking. And they look at, how can I help this company be successful in China and this local Chinese? And, if I go back to Chinese people being successful overseas, they probably are not being successful because they're not doing the reverse of what foreigners are doing here. Foreigners, it's like, how do I help this Chinese company? Chinese going abroad is, how do I help this French company or this Australian company be successful?
Interesting.
With what I know and what they know. So that's sort of my opinion.
Yeah, to elaborate more on Fritz and its success, I heard a story that he had a big idea. He had a big idea of saying, what's the most expensive thing we can sell online? And at that time was travel. And I remember someone told me it was a breakfast with friends. They were sharing this idea. And he was saying, it's travel. So you don't buy a house online, you don't buy a car online, but then the third item is travel. Then that's where I want to go. So he had a big idea. And then the details of operation were certainly the rest of the team. And indeed, I heard also the stories that he started several times with the same team, different businesses. Part of the team was the same. And actually was Fritz was successful in exiting all the companies before. The best exit was Tuna, or maybe I missed some failures, I don't know.
Mm-hmm.
But he had a very good story of keeping the same team or similar same people. You had the same understanding, right?
Yep. And the other thing, as an example, using Fritz, which every founder should do, Fritz would put every person he ever met into his address book. And whether someone wanted to invest in Tuna or not, they would get updates from him. Now, even though, I might not want to invest in Tuna, I might have someone else in my network who did. So, you'd forward the update to them saying, hey, I think this might be of interest to you now because they're at a stage where you would be willing to invest because you're like a Series C investor or a Series D. So founders who keep in touch with all the people they meet, because a lot of times because a lot of investors are tire kickers when you're at the very early stage. They'll listen to you, but they might say, I'll get back to you, which is their way of saying no, or they want a whole lot of information, which is another way of saying no. The really good investors, which is another lesson for any founder, the best investors in the world will tell you on the spot, yes or no. And when they tell you no, they will give you very good reasons why. And you go, wow, okay, I didn't think of that, because they want to help you. They're saying no, but when they say no, they're going to help you. And even when they say yes, they're still going to express some reservations they have, but then they'll say, but I want to help you through that. I don't just want to give you money. I actually want to help you through this hurdle I see. And then there's a healthy debate. So, yeah.
You do a lot of things, and that was a bit of struggle of preparing the interview because you have been involved in a lot of different things, including now in Africa. So actually, in order to direct the second part of the interview, and we will have to make it a bit shorter than the first part, I'd like to ask you a question which will help me to direct the second part. Is what do you think people value you most among your clients, when you are non-executive director? What do they value in you so that they ask you to be a non-executive director or investor? What would you say would be the main reason they would take you?
I'm going to use a little bit of language here. I cut through the shit and all the noise and get straight to the heart of the problem. Because sometimes people, I call it make the call. Other people might say lean in. But, my thing is we don't have time to sort of pussyfoot around. We need to get to the heart of the issue. If there's a problem, it's a problem. Put it out on the table and let's talk it through. What needs to happen to resolve this or improve this? I remember years ago saying to a privately held business, to the board, they're all in their mid-60s. I said, I think you are afraid of digital because you don't understand it. And the future of your business is not in this part of the world, it's Asia Pacific. And let me tell you, just take you through a day in the life of some people in Asia and how they use digital technology. And this is back in 2015. And at the end of it, the chairman of the company went, "You've been really harsh, Philip, but I think you've told us the truth, and I don't feel I'm equipped to be the chairman of this company anymore." And he looked at the entire board and he said, "And I don't think any of you are appropriate for what we need to do for the business moving forward." So I'm not afraid to have challenging discussions and get to the heart of something, and then what do we do to fix this or help this company change? So I just like dealing with issues, problems. It's the same when I'm coaching founders. Could be something that's holding back the team from working, and no one's talking about it. What's the elephant in the room? Let's talk about the elephant and get it out of the room. It's just like in boyfriend, girlfriend, husband, wife relationships. There can be something that holds people back from being their best, and you've got to deal with it. So I think what people would know me for is, no bullshit, cut to the heart of the problem. And if there's a challenge, then what are we going to do to fix it?
It's very interesting to mention coaching as well for entrepreneurs. I feel a lot of entrepreneurs believe it's a luxury until the time where they actually realize that they are stuck, or they talk with others, but they realize they need to have a follow-up. And what made me change my mind on coaching myself was to be part of EO. And then I realized with the Scale Up book and so on, EO, how important it was to get to open your mind with a few remarks from others, a follow-up, accountability toward the group. And that's, I think, the same as when you move from an average accountant to a good accountant, an average financial advisor to a good financial. There is one step where you think, okay, I need a coach. And I feel we are always too late to make this decision as a founder, as an entrepreneur. Do you have the same feeling?
I was too late. That was my problem. I was 38 years of age. I was making a lot of money. I was managing director. I thought I was really successful. And then my marriage fell apart because I was more focused on work. But, there are a whole lot of issues that people around me didn't call me out on, didn't challenge me. So people call it counselling. I had counselling. My marriage still failed, but that was my sort of tipping point and wake-up point. I had no one around me that would call me out on things, again, pardon my language, but to be my bullshit detector and go, why are you doing that? How's that adding value to what you're doing? Or, hey, do you realise the way that you just handled that person was belittling? Like, you put them down. Why? Why are you judging them? So I wish I had learned what I learned at the age of 38 in my early 20s, maybe even at school. It's not something that people cover, but I really wish I'd learned what I learned a lot earlier. That's
the point. You said the team is very important when you invest, but that's not something we learn. The team's personality, basically, of each individual and then collaboratively. But that's not something we really learn in business school as much as we should. We learn about finance, we learn about marketing, we learn about this concept, but to what is about trust, what is about your personality, which you and how to express it. Actually, that's key at the end of the day, and we don't work on it enough. And this should be in business school, for instance.
Should be, and how you work with people, and also, one of the fundamentals, which again I learned too late. I wish I'd learned it earlier. Is that I like to break things. If something's going really well, I'll break it so I can fix it, and that's what I used to do with my relationships. I have a great relationship and then I'd break it so I could go in and fix it. That's so unhealthy. Or if a business was going well, I go, oh, it's going, what? There's no problem. And I'd break things. I'd break client relationships. So I've learned now not to break things and to walk away when it's going well, put someone else in place and leave it, otherwise. So I like conflict. I like tension because that sort of brings out my creativity. But there's also a very dangerous side to it. And again, I just wish I'd learned that a whole lot earlier.
Interesting, you say you to some way be thrilled at breaking things, like feeling the tension about it, because in every stage of growth of a company, actually you have to make that. You have to break a little bit to stretch your finance to move to the next growth stage. And sometimes you run a bit out of cash. Sometimes you are cash poor during this growth stage, but you have to accept it. It might break a little bit. It might break even, and you might need a bridge financing or whatever in between. So actually to have this thrill might be also an indication that you are an entrepreneur, to in some way not being afraid of breaking things. Don't you feel that too?
I do, because when you're doing a startup, you think that you've got something that's going to break an existing industry, or it's going to break an existing habit for the better. So you've got to have that mindset. But then, like every successful entrepreneur, you need to understand, when is it time for me to walk away? And, I really respect how Jack Ma, even though he's in a bit of trouble now with Ant Financial, but I really respect how he walked away or stepped down from Alibaba. But in doing so, he had a very long plan in place for that transition. But, he knew, I'm not the best person now to run this business. Daniel is much better. And likewise, Daniel's got other people that have risen up, because he too has said, there are better people than me now to run this business. I've got to step away, otherwise I'll break it again.
Yeah, interesting perspective. And Ray Dalio has a similar perspective in Principles, talking about the transition. He goes in depth into it in his book. I'd like to talk about Moojing now. So one of the two companies you are hands-on involved is Moojing. And I feel very close to this business because it is in data. It is about e-commerce. And to be totally transparent, we are using a lot Tao Shuju. So Tao Shuju is, I feel, a competitor. You are going to tell me if it is or not. It is extracting data as Moojing from marketplaces, scrolling or scrapping. Actually, I don't know the true difference between scrolling and scrapping, but extracting data from those marketplaces. And I feel a bit like App Annie is doing, extrapolating some numbers, because you can scrap everything, and getting sales volumes, getting maybe also the comments on the marketplace. So mainly Taobao, Tmall. I don't know if it's covering JD.com. First, is my description correct? And secondly, how do you do that? How do you extract the data?
Yep, so your description is very correct. And there are a number of competitors to Moojing, both in China and overseas, that we compete against. And they're crawling or scraping, both are the same words. So, you're going and you're taking information from the public pages of the internet to then provide data to clients. I normally don't like to promote my own companies, but, with Moojing, we are crawling and scraping Taobao, Tmall, JD, Suning, Kala. I've probably forgotten a few now, but, we're trying to scrape the entire ecosystem to give a brand an understanding of, okay, if you're Adidas and your competitor is Nike, what are they doing in the e-commerce space in China? What are their price points for their products? What's the distribution by province? Are they stronger than you in Guangzhou than, what you are in, say, Beijing? What's the public saying about you? So trying to get that competitive understanding in the online market, because it's just moving so aggressively in China, from not just growth, but the transition from offline to online world. Why do I think we have an advantage? A lot of our competitors only scrape a subset and then extrapolate data from that. We scrape 99%, so more than 100 million products in our database every month for competitors. We don't pretend that our data is 100% accurate. Every one of our clients knows that going in, but we try to be as consistent in updating as we can. So it's sort of like, Nielsen in days gone by would be the go-to point for an FMCG brand if they wanted to understand what was happening in the offline world in supermarkets and convenience stores. I think we're trying to be the Nielsen of e-commerce retail data.
From a technical point of view, so 100 million, you say, products you are scrapping online every month. But people might ask for sales volume. And I found a way, and you didn't tell me if I'm right, if I could be a good developer or not. The way to get it could be to see the inventory of each product, and you order like 1 million times this product, and then it's remaining only 900. And then the day after you type again, I want to buy 1 million, but it's only 800, and then you get the fact that 100 were sold. Is it the magic behind it? Is it the way you do it? How do you do it?
Yeah, because in China, I'll use female apparel as a classic example. You crawl the public page and it says, oh, this particular SKU has sold 10,000, as opposed to other shops where they sold 1,000 the same item. But what's not being taken into account is the return rate, because when females buy clothes online, they might buy 5 items, but they return 4 because it's not the right size, not the right color. But those are still going to show as sales in the public data. Clients want to see what do you think is the real number for orders or volume based on the returns that happen across sectors. Mobile phones has the lowest rate of return because people they know what they want. But, in fashion, shoes, fashion accessories, you've got incredibly high rates of return. So, again, that's where some of the magic happens. Well, magic is the wrong word, but that's where, based on clients that we have and we know what their real data is and their rates of return, we can then start, using that data as our client base gets larger and larger to be more accurate on assessing the rate of returns. And it varies by season. Yeah.
And the number of sales, so you are getting from the public amount that is displayed on Taobao and Tmall, yep. Or is there something behind it? So it's public. The number of sales is public, and you can scrap it on a daily basis. I see. Yep. And then you accumulate it, and you have calculation, extrapolation as well, and based, as you said, on the rate of return, you could have an accurate estimation, but it's still an estimate.
Yeah, and we only crawl the public pages. Again, some competitors will pretend to be users and log in, pretending to be a real person or a real merchant. That's illegal. We have a lot of international clients, and I have to regularly, comply with their compliancy. So we go through these due diligence checks from hell. But we have to be 100% compliant, particularly for American and European clients. So that sometimes frustrates my Chinese team. But in the long run, it's in our interest to do that. So.
Yeah. And technically, actually, when you log in, you might get kicked out by the platform who doesn't want you to be logged in and scroll so quickly, so many pages. So it would be kicked out. At some point, I think there is a bit of difficulty on the long term. Okay.
Yeah. And it's just it's illegal. You just don't.
And
do
it's
it,
illegal from the platform. From the contract you sign with the platform, when you subscribe to as a user, you cannot scroll it. The platform is forbidding it, right?
Yeah. Whereas if you're just doing public pages, whether it's because some of our competitors don't just do e-commerce, they're scraping travel pages, or they're scraping, Didi's pages or Uber's pages. They're scraping lots of public pages to give information on travel. education, banking, finance. So, yeah, it's not just e-commerce.
And I might be too technical, and tell me if I'm too technical, but I'd like to know why API is not more used, actually. Is it because it's the asset of the platforms that they would never share? Is it because Chinese ecosystem are just more closed? Because as far as I understand, there are not much use of APIs in the way you work. It's more about crawling, scraping.
Yeah, they don't want to. Yeah, they don't want to release their data. So, yeah.
I see. So,
I mean, if you're a Taobao merchant or a Tmall merchant, then you have access to your own data anyway in the back end, and you can get some limited competitive data, but you've got to do that platform by platform. And again, you're looking at what they say the sales volume for competitors, and again, it's taking into account returns. So there's a lot of additional work that the clients have to do.
About pricing of the offer, actually, it's very affordable. It's starting at 3,000 GMB per year, and you can even use it on a monthly basis at 400 GMB. And I was surprised. I had a meeting with a very high-profile investor. They invest in a lot of fashion brands, and they told me, "What do you use, Matthew, in order to understand e-commerce?" And she told me, "I'm using one of the softwares." And I was surprised how actually widespread is the use. Investment funds are using it, and I didn't initially think a bit of it. But when I talked with App Annie a long time ago, with one of the funds, they told me the first client was an investment fund to use statistics about apps. App Annie is providing statistics about apps. But I feel that's the same for you. It's also because it's affordable. Investors could use it before making a decision on investment.
Yep, we've got, so originally all our clients were brand clients. Well, originally they were local Taobao retailers, but then it's sort of gone into brands. But we've got investment funds that are looking at what are the hot categories and what are the hot brands within those categories, and particularly like local Chinese brands. So yeah, investment funds are looking for, they might get a pitch from somebody, but they will go in and use our data to go, okay, is that valid, that assumption that's being made? And, whoa, I didn't know there was that brand that seems to be doing very well at the moment. Why? And then they will sometimes go knocking on that door and saying, we think that if you had some investment, you could accelerate your growth.
What about the competition? Do you feel it's a very intense competition? My feeling is that when you start a SaaS business, a very product business, at some point you need to add a layer of service. And otherwise, you might compete only on the product, and the product becomes a commodity in some way or another, except if you have a monopoly like Facebook. But at some point, you might have to add, I shouldn't say monopoly, but you are so strong that people, you don't have any competitor anymore. And I feel that at some point there is a beautiful view on being a product. There's a beautiful view on being a perfect product, SaaS, very engineer-like. But then find out that competition is hard, and then you add a layer of service. Do you come up with the same conclusion?
Yep. So, we've had a few mutations. So now, we've got a team that provides analyst reports. So the client doesn't want to assess the market. They want us to take our own data and then produce monthly reports for them that they can just read and maybe use some of the data. So others where, we've created dashboards for them that are unique to them. So when they log on, they're just automatically on their dashboard getting what they see as the key criteria. The other thing that we've found is that we've got clients that don't want to go on to our SaaS platform anymore. They've become incredibly sophisticated and they want an API link direct to our data because they've built their own data warehouse, and we've got some that say, we just want your raw data. We don't want any adjustments that you've made, and they call it point in time. Just give us your raw data, because we've now got a team of data scientists that are going to take your raw data and we're going to make our own analysis.
I see.
So,
That should be for hedge funds, and to plug in a Google sheet directly with a formula you from your API, right? That would be the case.
we've also got some brands that have done that as well.
Okay.
So taking raw data, because they're looking at things like, what if they price these like elasticity? Like if I change the price of an SKU, will that open up a market for me, that I haven't looked at before? Or why are we so strong in Western China and not so strong on a per capita base in Northern China versus our competitors? Is there something we're not doing? So yeah, they're doing a lot more deep dive, and they've got data scientists on board to, like one of the brands that had no in-house capability before now has 3 data scientists. So, and more than 30% of their sales, all China sales, is coming through e-commerce. So they're investing a lot more into understanding it. A little like in days gone by where an FMCG would invest in, software that would help them understand where on the shelf should I be, what level, and then they would negotiate that positioning with the supermarket. It's the same now because, they're managing multiple channels. And the other thing is that even for a single product, they're looking at the life cycle and going, okay, it's on my Tmall flagship store now. It's getting a little bit old. I want to move it into some authorized Taobao resellers. Used to be the old way. Now they're looking at, I might actually want to move this SPU to Pinduoduo. Or if it's a more high-class one, I might want to use VIP shop for it. So they're planning their sort of allocation and channels to market based on the product's life cycle, and they want to do this deep dive.
You sold it to me. I'm going to check Moojing and ask my team to look into it. Thanks for the explanation. I like to now to go back on your first life in a corporate Australia and then corporate China, and your perspective on advertising. My view is that advertising and those big companies, and you mentioned WPP, Publicis, and so on, are a bit disrupted currently. It's not. The rules, right? The rules are changing, and when I think about them, when I meet them, I feel that the platforms might decide for them where to push advertisement. AI is so strong now with Douyin and so on. So the fact of allocating media might be decided by the platform itself. So there is a part, I feel, of advertising which is going to the platform. And then there is a part of creativity, which is still within the advertising world. But then you have in competition with much smaller companies or individuals sometimes, who could be very, very creative too. What's your view retrospectively, 10 years, 11 years after leaving this world? What's your view on the evolution of advertising, specifically in China? Because this is where it goes the fastest, I believe, in the world.
So my biggest criticism of all the publicly listed advertising agency groups 10 years on is that, their responsibility to their clients is to lead their clients in understanding consumer behavior and then how they should identify the most appropriate touch point to influence that consumer to the brand. That's always been their responsibility from day one. The problem is that, for all of them, most of their profits were coming from traditional media, and I know this is a very controversial subject that will probably land me in a lot of hot water, but, and illegal rebates from media, which were probably coming from offline media. So it wasn't in their interests to change, because if they switched to digital.
If I may add one thing for people to understand and to check if I understand correctly, when you buy a large volume of media, you would get rebates from the media itself, but those big firms would not impact this media to the end client. So let's say I'm using TV a lot and I get a 10% discount, I will still charge my end clients the full price, the red card, and not the 10% rebate. Are we talking about that?
Yep. Now, there's agencies that have agreements with their clients that rebate should go to the client, but the agencies, had very creative ways of laundering rebates, money laundering. That's effectively what I would call it. And it's now under investigation by the FBI in America. It's just one example. So agencies were protecting their profit instead of acting in the best interests of their clients. And what happened was, a whole bunch of startups went, well, the future is digital. The future, like Curiosity China, social CRM. Why an advertising agency hadn't had the guts and the courage to do something like that when Alexi and Judy did it, and lots of other people have done it here in China, is because the agencies were just so slow. And they still are. That's probably why they'll eventually die, because they're just becoming increasingly irrelevant in today's market in China. On the creative side, yes, they still have a reason for being, but yeah, they really just lost the plot, and a whole lot of local and international small players have sprung up here in China to help clients through, this digital jungle, which I know was the name of the business from an Australian guy a few years ago, but
a good name.
It has been a jungle, a good name. It has been a jungle, and finding your way through it. And there's a lot of different, the problem is that there's all these different, I call them digital agencies, doing different parts of the mix. And I unfortunately think that that's why a company like Accenture, which has always been a consulting business, now is one of the largest advertising networks in the world, because they've harnessed their consulting pedigree and taken a position in digital, stuck the two together, and built a very successful consulting space in this space, which is challenging the traditional agencies. So asleep at the wheel.
Yeah, Accenture has become, through a lot of acquisition, actually a digital player and a media player. And thanks to, unfortunately, not among us anymore, Pierre Nanterre, who transformed Accenture in the world. That's a very interesting changes indeed in the advertising, media, and consulting and tech world, where the frontiers are reshaped. About all your work you do in different companies and different worlds, basically. I'm very curious about time management. I'm very curious how you manage your time. And you came up to tell Sophia that you have you split your time 50%, 25%. So yes, you have something very precise. So 50% on January and Moojing. So January being the e-commerce marketing platform. Sorry, you see, I'm getting lost with all the names. But so you're January and Moojing, where you are hands-on. You are working on the execution, as far as I understand, as well, involved into it, and then 25% on non-executive as non-executive director. And finally, 25% mentoring young Chinese entrepreneurs or people in a pro bono role. So my question is broader than the split of time. Is how do you manage your time?
So I get up at 4:00 every morning, and so I've always been a morning person. I'm not an evening person. It's a very quiet time of the day. So for the first 2 hours of the day, that's just my education. It's getting the different news feeds that I get information from around the world. It's also where I do some reading, and it's also where I review my day prior. So those first 2 hours are really important to me. And then I start my calls with New York and America in the morning, typically from 6 till 8. So to answer your question, I chunk my day down into different parts. I'm a visual person. So I'm addicted to Google Calendar.
Okay.
And I can have a week's view. My assistant and myself, we map out my week. So when a task needs to be done, then, she's pretty good or I'm pretty good at saying to someone, I'm not going to get to that until blah, blah, blah. So everything, I can see my week and my day. So if I need to move something because something urgent comes up, I can just with my mouse drag the day. So it drives my assistant, used to drive my assistant crazy. But yeah, my time management is through Google Calendar. So my diary is really important, and I just look at that every year. So the second week of December, I do a year review. And what am I going to spend my time on next year? What am I going to drop? How do I have that conversation with those people that might be affected by it? And then so my days are very tight, but I have 1 hour set aside each day for what I call the oh shit factor, because, anything could pop up, like an emergency or something. But that's how I manage it. That can be, some people, particularly in China, would message you and say, can I see you tonight? Or can I have a meeting with you this afternoon? The government used to do that to me a lot. Can you spend 2 days with us from tomorrow? I'd go, they've learned, like everyone else, is that, you need to work with me like 1 to 2 weeks in advance. Otherwise, it's not going to get in there. Unless it's super important, like the founder's having a meltdown, then of course I'm going to deal with it. But yeah, visual, Google Calendar, assess how long something's going to take, and being very disciplined on what's adding value. Is this a waste of time? Just forget it. So again, I think a lesson I wish I'd learned many, many years before is learning how to say no. My problem was that I was seeking approval from lots of people, and I felt that if I said no to someone, that they were going to think less of me. So, I was more concerned what other people thought of me. I was real arrogant.
How do you say no? How do you say politely no? You don't have the time. It might not be useful for you that we spend time together. How do you say no in a good way?
First off, you just say thank you for them asking you, and just be honest and say, look, at the moment I would like to help you. However, I don't have the bandwidth. And whenever you say no to someone, and this was something that Peter Irvine taught me my first 14 years, but when you say no, I just didn't learn how to say no from him. But what I watched from him was, when you say no to someone, always give them a solution. So, I'm really sorry I can't help you at the moment. I'd like to, I just don't have the bandwidth. But I really think that, Matteo would be much better at helping you at the moment. If you're okay with that, let me reach out to him and see if he's willing to do that. That's the best way.
You don't have a to-do list, right? You put everything in your calendar directly.
Yep.
That's something that I've noticed. Very productive people don't have to-do lists, actually. I learned to use to-do lists when I was in business school, and then now everyone telling me not do to-do lists anymore. You use your calendar directly. So you put the meeting in the calendar in a precise time, precise day.
Yep. I even have like half an hour for emails and calendar. But, it's to look through the emails that I need to look at. Yeah, every day. If it's a task, which is a to-do task, it's, how long is that going to take me? 15 minutes, half an hour? That's in the diary. So, and other priorities come along, so you might have to move that task. But if someone, if you've promised that to someone, then again, my assistant will say, they will alert the person and say, look, Philip, I know he said he would get that to you by Tuesday of next week. It's going to be Wednesday now. So when you can't deliver, telling people that, in plenty of time, so they can manage their expectations. Because again, that was another lesson I learned when one of my bosses sat me down and said, you think you're a person of integrity. I thought I was. I thought I had lots of integrity. And he said, you had no integrity whatsoever, Philip. Absolutely none. I was so angry with him at the time. Man, I went off at him. This is my global CEO. And he said, well, just to use an example, of yesterday, you kept someone waiting for 5 minutes. That's zero integrity. You told that person to be here at 9 o'clock and they arrived at 9 o'clock. You kept them, I don't know why you kept them waiting for 5 minutes. Is it to show that you're more powerful? But he said, you've got no integrity. You've lost it with me and you've lost it with them. Maybe he was being really harsh, but it was a harsh lesson. So, yeah. So if I can't deliver on something, I have to tell somebody. I can't, I know I said next Tuesday, but, this has come up, so it's going to be next Wednesday or whenever it's going to be. But, manage expectations with people so you don't frustrate them.
And the other element you brought is that in China, the government official, maybe more than others, would organize meeting very quickly, not announced sometimes, jumping into your office and very nicely, but not with no plan at all. And I remember a very prominent investment bank in Beijing, actually, foreign one, and the CEO of some companies were suddenly, or co-investors, jumping into the office with no planned meeting, nothing planned. That was very common. I feel that has changed a little bit. I feel it's a bit more organized now.
I think it's changed a lot.
Okay.
Even the ones I work with know that, because I would say, what's the plan for the meeting? What's the outcome that you're looking for? Or why are we having this? Instead of trying to work it out as you're going through it. So I don't find that anymore, actually. All the government people I work with are super, super planned well in advance. So
it has changed a lot, yeah.
Yeah.
It's already more than 1 hour, much more than 1 hour we talked together. I think we could go on. Actually, I had more questions planned, but I feel that 1 hour, 1.5 is a good time frame. I don't know if you listen to podcasts, but I feel 1 hour, 1.5 is a good one. I listen to Speak Q, so sometimes it reduced to 30 minutes, 45 minutes.
Mm-hmm.
Thank you very much for your time, Philip.
Thank you.
I really enjoyed it. As you said, it was a very very direct. And when you talked about the media agencies, and when you talked about Moojing as well as software, it was very transparent. I think I really appreciate. I think people listening to us are really appreciating it too. To give you a bit of feedback we got in the past for the podcast is some investors were listening to us and saying they learned something more in depth, more precise than the pure nice interview when you sell things, right? And you try to people try to sell each other things. So thanks for being transparent. That's what people like in the show. Thanks everyone for listening, and I hope to see you soon in Beijing.
Thank you very much for the opportunity. Really enjoyed it. Cheers.